Hi, good morning. This is YK. I'm going to talk about the mutual fund today. Initially, I thought I'm just gonna write it out instead of including this recording. I think it's better that me show you the capability of mutual fund using fundsupermart.com. Yeah, video. So here we are on the website of fundsupermart.com. So there are a lot of things, but normally I just look at research and recommended funds. Here you can see all the funds that are recommended by Supermart.com. Yeah, assuming they are not biased, of course. Um, based on their track record, high resiliency and also low cost. So apparently the risk will always change. So here you can see it's divided into three parts: equity, dividends, and fixed income. What it means for now, you can just ignore that. You can just income, low risk, dividends as medium risk, and also equity as high risk. But of course, higher risk, higher returns; lower risk, lower returns. Keep in mind on that. And here you can see the recommended funds. So their risk rating. So the risk rating is skewed from 1 to 10. So 8 is considered quite high. And also the return over a certain periods. And also their sell charges. So the sell charges mean, for example, let's say you invested 1,000 ringgit. If 1.75%, what it means is that for example, 75 is actually 17 ringgit 50 cents. Like, for example, 1.75% is like this. So 17 ringgit 50 cents is 1.7% of 1,000 ringgit. So basically, it's the fees that we pay for example, the fund managers for managing and ensuring the profit of our funds. Basically, we are paying them salary to manage our funds. Yeah, in the layman term, is like that. So basically, whenever you insert, like, for example, 1,000 again, so we minus that surcharges. So it's like 9 equal is the amount that we invested. So 1,000 ringgit. This amount is actually paid to the fund manager. This is the total amount that we have invested. Yeah, so this is the meaning of surcharges. And inside here, for example, if I want to research one fund, right? For example, this, I just go over here and you can see the graph of their performance. And these are two metrics. Normally, this it means is that this is the projected return, just a realistic return. So as you can see here, the return is actually way high uh, with over the long term. It's actually lower than the projected return. So here is just in a summary of why they choose this fund as recommended fund. And for me, I'll go over this few sheet, and also I'll just look at these are all the details here. Oh, okay, it's approved by EPF. That's too high risk. Okay, oh, not bad. Another thing. Okay, here the fund performance and bit-to-bit annualized returns. What it means is that over the 10 years they have this accumulated return, right? They eat into annual returns every year. So meaning over 10 years, every year the ROI is 13.81% if you have invested this one 10 years ago. Normally I just look at it because we want to I'm a long-term investor. I want to choose a fund that can performs consistently over a longer periods. That's why I look at like of at least 5 years to 10 years, so that I can look at that. I mean, although past performance cannot ensure their future income, but at least I need to know in the past performance they have consistent result. So in this case, over the 10 years, every year they will have this annual returns of 18.81%, and this is just the accumulated amount, 464, which is quite high. Apparently, if you put 1,000 ringgit 10 years ago, now it's like roughly 2,600 ringgit. Just imagine the amount increase. This is just a unit price for now. And this is my investment strategy. Normally, when I invest in mutual funds, I will just look at high risk fund, and I invest it over a longer periods. What do I mean? Over a longer periods, I invest instead of in a lump sum, for example, like 10,000 ringgit at once into one fund at one time. I will just opt for RSP here. What do I mean RSP? RSP is actually a short form for regular saving plans. So what is regular saving plans? So regular saving plans is actually a very good thing, like for small investor, including a fresh grad like me. And so what it means basically, I can invest a small amount of money every month. So for example, if I commit like 200 ringgit every month, so basically it will purchase whatever it can purchase with 200 ringgit every month. So for example, here, right, the unit price, for example, given a fund in our regular saving plan amount is 400 ringgit, right? So let's say in the first month of our investment, unit price is actually 50 cents, and let's say 200 ringgit. How much can we buy? Give 400 units of this fund. Second month, let's say the unit price dropped to 45 cents. Let's say, since we're using the same amount every month, so 200 ringgit divided by 45 cents. So in here, we roughly get like 434 units. Okay, I forgot to get one thing. The cost per unit is actually the same with first month, but in the second month, the cost per unit would be roughly 45 cents. You might ask why? It's because this is the accumulated result of our investment. Let me show you. So in the total of these 2 months, how many units we have now? It's actually 844 units. So how much have we invested, which is our cost? It's actually 400 since it's 2 months already. So what is the cost per unit in this case? As you can guess, it's 400 divided by 844. Which is 45 cents, 47 cents, which is this one. Single month, it will become like this single month cost per unit. Over, if it's like over the 2 months, our cost per unit is 47 cents. So what it means in this case is actually, as you can see, we are lowering our risk of investing at a higher price. Using this method, RSP method, is good for long-term investment, which means you invest a long-term over a longer periods, as it will lower your risk, as also it also how to say decrease your chance. It lowers your risk and also decrease your chances of getting very high profits, but it ensure lower risk. As I said earlier, it's lower risk, lower return, but this is consistently. So, for example, if you can get a consistent result over 10 years, it will be a very profitable as an investment already, versus like a very volatile investment, like, this month you can get a very high return, then next month you get down, and you have to go and manage, like, for example, okay, this fund, like, for example, this month is very low, then you go in. Okay, just forget all the juggles I say. What I mean is actually, if you are using RSP, you don't need to care about what is the unit price for this month. You just invest a certain amount every month, and this trick will do for you. But keep in mind that this has to be consistent, which means I will advise you to invest a period of at least 5 years to actually see the result. So, yeah, please actually recommend. And once you're off for RSP, you can actually register RSP here. It will ask you to fill in the form and send it to them. It will take like roughly 1 to 2 months to actually, because they need to contact with your banks. So you actually take like roughly 1 to 2 months. After that, the RSP amount will automatically deducted from your bank account every month on the 15th of each month. And just imagine you can invest as little as 100 ringgits every month and lower your risk. At the same time, you don't need to manage. You maybe need to look at it once in a while, but you don't need to like look at it every day, which is a good thing for novice investor and also small investor. There are also other investment options, like for example PRS and EPF. But since my time is up, I will just a lot of the digest I know. If you have any questions, you can just post either below this YouTube, below this YouTube video at the comments, or right away or comment right away in my blog, so that you can so that I can answer and can see what is your doubts. Maybe I'll update my blog contents and also answer your questions. Hope you learned something from it. See you next time. Bye.